Hey everybody, it's Cassandra Keller with Better Homes and Gardens Real Estate, and today I am bringing on Mike Petrovich of Petrovich Team Home Loan. He sent out a great email earlier today to a lot of agents that he works with, updating us on the lending changes that are being made in response to the coronavirus. And there's quite a few, so I wanted to go over them and share them with everyone who's in the position to currently be looking for a house, or if you thought about looking for a house recently, and even moreover, if you are a seller, you want to be able to pick the right loans right now. So here we go. I'm going to get this switched over. So hi, Mike.
Hi.
Hi. Thanks for jumping on and joining me with this. So I can either let you get started or I can kind of go over through some of the email things, but you want to give a quick rundown of why you sent out the email?
Yeah, so there's changes in place for just how they're going to process loans from start to finish. There's always been rules in place about how we verify employment, verify income, and they're making adjustments to those because investors are just uncertain about unemployment numbers, uncertain about the market. So they're putting things in place that are running the gamut from either being just inconvenience as far as getting a loan done to, possibly taking buyers that were qualified, even a couple weeks ago and making them no longer qualified. And hopefully a lot of the stuff is just temporary until things kind of settle down, but there are just some changes that are tightening the market, and then just changes in processing loan. If anyone's ever bought a house, that buying a house is kind of an involved process. Getting a loan is an involved process, and they're just making it a bit more involved to protect themselves with everything that's going on. So I sent that email out just kind of saying, here's some of the major changes that are coming. And the thing is, a lot of these changes, actually all these changes, are not changes with Fannie Mae or Freddie Mac or FHA or VA. There's not changes from the government side. These are changes the lenders are making that they can add their own rules on top of the government rules. So government rules are not changing. The lenders are changing the rules. So it's not uniform across the board. They're kind of trickling out, and everyone's kind of doing their own things to protect themselves. But I kind of saw some of the ones that are going to start trickling out to probably most lenders over the next couple of weeks at least. I think these are all going to be standard, at least for a little while. Within the next week, next 2 weeks, you're going to see all this stuff kind of come out for everybody.
Okay. So because there are a couple things that we're going to be touching on, this video might end up being a little bit lengthy, but if you are in a position where you're thinking about purchasing a house, or maybe you've been out looking for a house and you just haven't found the right one yet, please stay tuned and stay on this so that you're aware. This likely will, if you're a FHA, VA buyer, this is very likely to potentially impact you. So I just want you to be informed and aware of the situation. So first thing I would say, so it looks like they're doing a verification of employment call that day.
Yep, and and some lenders are doing that. Some are doing 24 hours, some are doing 48 hours. Like I said, it's not uniform, but they're all tightening that. So on a loan, we verbally verify you're still employed. We usually do that. The standard rule is usually 10 days before closing. So we call your employer, say, hey, do they still work there? Can you verify they're still employed? And that's just to make sure that by the time you get to closing, there's a reasonable chance you're still employed by the time you get to closing. Now that there's risk of unemployment spiking, they're shortening that window. So right before I got on the call, I had a refinance that closed last Friday. Everything went fine, and this rule was put into place on Monday at this particular investor. And they just gave me a call and said, hey, we have to, before we'll fund this refinance, we need now to call their employer, make sure they're still employed before we'll release funds. So it happened that quick. We closed on it, it was fine. And now 4 days later, they're requiring us to do this verbal verification of employment. Not a huge issue, but it's on a few of mine, it's been hard to get a hold of employers just because everyone's working from home. And just a timing factor. If it has to be done the same day and you're closing at 8 a.m., they won't release funds until they verify that employment. So I'm telling people to push their closings into the afternoon, so we have that time to do that. With lenders that are doing it on the same day, I'm just basically working through trying to make sure everyone's aware that I need to contact your employer, and I'm gonna have to make this call, or a prospect's gonna have to make this call right before closing to verify your employee. Now, just a minor inconvenience, unless of course you did just lose your job, if you lose your job right before closing, that's going to cause an issue with the closing. You're not going to be able to close. But for the most part, it's just an inconvenience that could delay things. Hopefully just the same day, but just got to be prepared for it.
Okay. And then, so for us as agents and for the buyers, being aware that it's likely that we're not going to have early morning closings, because a lot of things get scheduled on the same day. So
Yep.
it's better to have that potentially scheduled in the afternoon then.
Yeah.
Okay, so FHA and VA, it looks like they're going through, and I'm kind of reading off the email that you have here, but FHA and VA going through quite a bit of transitions.
Yes.
So
Yeah.
let's go FHA.
Okay, so government lending, so there's FHA, there's VA, there's conventional. FHA and VA are considered government loans. How it works is the servicer services the loan, and if the buyer or the owner of that, the borrower of that loan doesn't make their payment, the servicer has to make the payment for them. So typically, servicers know that a small percentage are not going to make their payment, and they've kind of just worked that into the rate itself. Now, with the possibility that a lot of people won't be able to make their payments, these servicers are seeing the possibility that they will have a lot of defaults on these types of loans, and they'll be stuck making these payments for them. So a lot of them are really pulling back on, servicers are pulling back on the purchase of these government loans, which means the lenders are pulling back on the origination of these loans. So I have 6 investors I work with. I'm listening to people that are talking about other banks, things out there that are changing their guidelines on FHA and VA. They're doing things like increasing the minimum credit score. So FHA and VA traditionally were programs for people with less than perfect credit, and now you're seeing them increase those to 640, 660. I just got a notification today that Wells Fargo increased their government lending, FHA and VA, up to 680. So they're not going to accept anything below 680 on loans. I have some investors that have basically just, for the most part, stopped doing them. They've made the pricing so outrageous that, and they can do that. Just here's the rate we're going to offer on an FHA loan or VA loan is this outrageously high rate. Knowing that no one's going to take that, they're just basically saying, hey, we're not doing these for a little while until we get this all figured out. So
before you go on that,
yeah.
If someone's out there that is potentially had an FHA approval, pre-approval,
yep.
and then all of a sudden they stop doing this, it doesn't necessarily, like, they could maybe call around and kind of look to see if they have other options.
Yeah, and well, the issue you're going to run with that is that you kind of see people trying to, and I see this online with lenders that I'm in groups with in social media groups, is they have a buyer that's, the lender they had them at didn't qualify. So now they're switching over to this lender over here, and then that lender changes their rules, and now they don't qualify at that lender. So now they're, hey, where do I take this one with a 640 credit score or a 630 credit score? And they run over to this lender and say, okay, this lender's going to take it. Then 3 days later, that lender says, we're not taking those either. And you could be locked in, and the loan could be started, and that lender will say, hey, we're not taking anything below this credit score. And they could honor the ones they already have in the pipeline. They could say, this is retroactive, so now we're no longer going to honor these ones that are already in place. So it's kind of a tough call. What do you do with a buyer that you're at a lender and that lender says, hey, we're still doing down to 620 or 630 or 640. Do you move forward, or do you tell this buyer to, hey, let's hold off. Let's maybe try to work on your credit a bit. Let's see how this plays out. I don't want you to get started with a loan, and then 2 weeks before closing, that lender says, we're not going to honor this loan anymore. So just a tough call to make in those situations. So if you're an agent that has buyers out there looking, or you're a buyer that has a credit score that might be less than perfect, just do an evaluation, kind of see, maybe just a game plan of what you want to do moving forward.
So that's going to be kind of a day-by-day decision. Okay. And I'm assuming those same situation and changes are applying also to VA then, kind of.
Yeah, VA, and VA is, FHA is traditionally for someone with less than perfect credit or limited assets. VA has, is for veterans. So you could have less than perfect credit, you could have perfect credit. So for that perfect credit VA, there's still options out there. The rates are increasing on the VA and FHA loans, just because even at lenders that are not totally priced themselves out of the market. So in some situations, you might have a VA buyer that's, the VA loan typically is better than conventional rates, but right now we're seeing conventional rates better than VA rates in a lot of cases. So if you have the option to put down 5%, it might be better to go to conventional instead of VA.
That's definitely a new development there. Okay, so this I think is really interesting. So for anyone who has a rental property or a couple rental properties, and they're changing that so that you cannot use the rental properties as income.
Yep. So, and another thing that's trickling out also. So how it worked before is we would either, you own a bunch of rental properties, we would either verify it on your tax return, hey, it cost you this much, but you broke even or you made a little bit of profit. Okay, that's considered income, or at least you're breaking even, or you're not losing the full payment every month based on your tax returns, and we can kind of offset that payment in your income. Now, even if we can show your tax return that you're making a profit on those properties, unless you have 6 months reserves, a lot of lenders, I don't know, a lot of lenders are saying 6 months of those payments in reserve, which means that after everything's said and done, at the end you have let's say you're paying $6,000 a month on that rental property, you have to have $6,000 in an account somewhere. Otherwise, they're going to hit you with that full mortgage payment, and that might mean you don't qualify to purchase a house unless you have those reserves in there. Wow. And if you own 4, 5, 6, 10 rental properties with payments on them, and you don't have those reserves for each one, 6 months for each one, then your debt ratios are going to be way out of whack, and you might not qualify to purchase a home.
Yeah, that's definitely something to be aware of. So next thing, moving on, self-employed buyers. Mm-hmm. So the lenders are reducing the self-employed income by 25% unless the buyer can show 12 months of payment reserves.
Right. So, and this is not everybody. Again, this is another thing that's coming out one by one, but they're coming out to say, so normally we would take your 2-year tax return, we would get your adjusted gross income after all your write-offs, and that would be your average self-employment income. Now they're saying we take that and we reduce it by 25% unless we can show 12 months of payments in reserve. So if your payment is $2,500, you need $30,000 in reserve to use your full income. So someone that was self-employed, approved, now you might go back and reevaluate income and see if you can still use that full income, or if you have to reduce it by 25%, and that could affect how much you're approved for. And like I said, this is one at a time coming out, so you might get a lender that says, we're fine, we're good with that. And that lender could possibly say, a few weeks down the road, saying, hey, we're no longer going to do that. The reason they're doing all this is just for the reserve requirements are all in place in case that tenant that you have the rental property stops making the rent payment, or that self-employed borrower is not working. They want to make sure that you have reserves in place to make your payments before they move forward with these loans. So that's why they're adding reserve requirements to a lot of these programs.
Yeah, and I think that it fully makes sense. The last thing they want is people to get into houses and then default on them.
Right, exactly.
Yeah. Okay, I'm actually seeing this on a couple deals right now. The appraisals are definitely backlogged and taking 10 days to 2 weeks, maybe longer.
Yep.
So touch on that a little bit. You had, appraisers have been pretty busy for, it seems like years now, but really for some reason, the last couple months, it's really been through the roof.
Yep. And, a lot of appraisers out there have just decided to just not work for a while. I mean, just like everybody else sitting at home, not working, these guys just said, hey, I'm just going to take the next month or two off. So the pool of appraisers has shrunk, and I'm just starting to see it really hit appraisals on mortgages. How it works on my end is I request the appraisal. The appraisal management company finds an appraiser and assigns him to it. He comes back and says, here's the date I can have it back. We plug in the close date, and they do their best. They usually have it back in a week, 2 weeks at the most usually. Now I'm seeing them come back, and the close date might be March 20th or April 27th, and they're coming back with the soonest they can get a back date is April 30th. So now all of a sudden we're 30 days, 30 plus days on an appraisal in some cases. This won't be every case. Some appraisers might still come back and say, yeah, I can get that done in 2 weeks. But now I'm really starting to see it hit consistently where it's, I ordered one and it's 31 days to get it back, 32 days to get it back. So now we have to start adjusting the contracts and start saying, hey, even if we can get everything else done on the loan in a week or two, if that appraisal's not back for 30 days, we have to push the closing out 45 days on the purchase contract.
And then the last thing that I want to touch on with you too is the appraisals potentially turning into more of a drive-by appraisal situation. I mean, what does someone do if their home is in contract, but they really don't want someone in their house? Do they have a decision, or is that just
and you can and I actually have one right now where it was refinanced, and the borrower did not want anybody in their house. They had kids at home. They did not want anybody coming to the house. And that rule went into effect on last Monday, where Fannie Mae and Freddie Mac were going to allow drive-by appraisal exceptions. Fairly easy to do. You say you had to go to the lender that you're with and say, hey, we want to get this drive-by appraisal exception. and most of them are following the Fannie and Freddie guidelines. So you go to them, you say, is this okay if we do this? They still have discretion. They could say no, but most of them are just saying, hey, we're going to follow the guidelines that were put out. So I believe it's until May 17th. They're going to, and they might extend that depending on what happens. They're going to allow, even if the loan itself requires a full appraisal, they're going to allow either drive-by appraisals or what's called a desk appraisal. That's where the appraiser just pulls pictures from the MLS or has the owner take pictures or the agent take pictures and builds a report based off photos and maybe a phone call conversation with the owner. So there are options if you need to do that.
So that's really good to know that they at least have options out there to,
Yeah.
you know, keep few people in your house as possible. Well, thank you for sending that out. And I think that that's such great information, especially for anyone who's in the situation of looking to buy their home right now, you know, and being educated on what would actually happen down the road before you get into the, what I don't want to see happen and what we're trying to prevent by educating everyone is definitely, you know, there are costs involved with getting into a house and getting down the process, especially if you do an inspection and you have to pay for an appraisal. That can be anywhere from $400 for an inspection and $500, excuse me, for the appraisal. So it'll be interesting to see how it all works out. So anyway, thank you for joining me. And as always, if you guys have any questions for us, we are always here to help, either for real estate or for lending needs. Another thing that Mike can always touch on too is refinancing and what's going on with that. So always feel free to give him a call. I will tag all of his information in this post as well. So stay safe. And if you guys are ever curious about your home value, you are more than welcome to go to homevaluesbycassandra.com to get your free monthly report. So anyways, thanks, Mike. Have a great day.
All right. I'll see you.